Hello and welcome to One-on-One on Plus TV Africa. In the studio with me is Kyari Bukar. Kyari has served as Managing Director and CEO of the Central Securities Clearing System PLC, CSCS, which is the Central Securities Depository of Nigerian capital markets. He has also served in the capacity of the Chairman at the Nigerian Economic Summit Group. He is currently the co-founder of Trans-Sahara Investments Corporation. Thank you very much for joining me in the studio today.
You're welcome, Irene.
You have served in different capacities, wearing different hats at different periods. Tell me, how has the experience been for you?
It's been a wonderful journey. One of my former managers said that if you want to get something done fast, give it to a busy person. So I suppose I've been busy, and Nigeria kept me busy, both in the private sector as well as some collaboration with the public sector. And many of the roles I've played, whether as CEO of Value Card, CSCS, or even Executive Director in Bank FSB, I had enjoyed it thoroughly, in the sense that I do come in contact with young people that one mentors, and I've seen that they've grown and they've developed themselves both personally and professionally. So that's quite a satisfying stint.
Interesting. And I know that you're currently the co-founder of Trans-Sahara Group. What has the experience been for you so far?
As Trans-Sahara Investments is a private equity outfit. We are in the early stages of raising our first fund, which basically we're going through the challenges of any sort of a startup. If you're starting a new business, you're bound to have challenges. And,
of course.
We are naturally facing that, but we're looking at opportunities, and there are some light. There is light at the end of the tunnel.
Of course, there's always light at the end of the tunnel, certainly. Sure. So let's talk about the Nigerian economic space. How would you describe Nigeria's economic landscape at this point?
It's quite challenging, if I can put it in one word. This is a country that has all sorts of opportunities that we had passed on, meaning that we needed to have embraced those opportunities as they come about. And unfortunately today, we're faced with a lot of challenges.
I can imagine.
The global geopolitics is not helping us either. So we have been a monocultural economy, and many of us had been advocating for diversification. When you look at the economy from the point of view of contribution to GDP,
yes,
it's diverse. But when you look at the economy from the point of view of revenues to government, unfortunately, it is the oil and gas sector that contributes tremendously to the federal government's coffers. And anytime there is a hiccup, we see it in what we have experienced in 2016, which was the major recession that we've had in the past 25 years or so of this country. And we haven't experienced the kind of growth that we've had prior to the recession. So since we got out of recession mid-2017,
yes,
the growth had been lackluster. And that basically means that more people are coming into the workforce, more graduates are coming into the workforce,
true,
and there are no opportunities and no jobs available. And the reason being that the business environment and the business climate is not conducive for businesses to hire more, or businesses to start and grow, etc., etc. So those are some of the complications that have been compounding the Nigerian economic situation in the last 5 or so years.
Let's talk in practical terms. You said a startup as you'd like to describe it. And we've talked about the geopolitical environment. How is this playing out in your business as a startup at this point in time in Nigeria?
Being a private equity outfit, you have to go look for investors that are going to look at the market you're going to play in. And we chose to play in the Nigeria and, of course, West Africa by extension, and look at investing in startups and early stage companies.
Yes.
Now, that requires a level of confidence by the potential investors that would give you their monies for you to invest. Now, those potential investors are not living in darkness. They know the world, they know where the opportunities are. And we basically try to sell them rising Africa. Africa is rising. And therefore there is a huge, there is a huge opportunity for people to invest. And over the next 5-7 years, the investments would grow at a faster pace or at a faster clip than any other part of the world. Now, that's one. When they look at Nigeria, unfortunately, they do not see that. Of course, there are opportunistic areas that people look at, people that are savvy enough about this market that would continue to invest. Newer investors, however, would rather go and invest in Kenya, Ghana,
for
or
example.
even South Africa for that matter, which actually means that we are not giving the proper narrative of the opportunities that exist in Nigeria. And it is not just the private sector or people like us that need to go. We did a roadshow in Houston about 2 weeks ago, and about 3-4 weeks ago, and it was received quite well. Now, that's just one person or one entity, but we need to have a concerted effort from the point of view of government of Nigeria to go out, reach out to those businesses and investors to come to Nigeria. The other thing is that we also need to fix what we have in-house.
Yes.
There has to be proper regulatory and business-friendly framework and conversations. So where the regulators are not helping develop the businesses that they're regulating.
Yes.
Rather, they're just, trying to stifle by putting out
regulations, policies that
actually stifle growth.
Yes.
So again, that's another area that the government needs to actually pay attention to. We have lacked something that as a kid we used to have, which is an economic development plan that we used to have. I believe it's 4 or 5 year development plans that were rolled over, and therefore there is continuity in the planning process. That hasn't happened in the last 2 or so decades in this country, and therefore that is also something that needs to come back into the discussions on how effectively we can dress up Nigeria so that it becomes an
make it more attractive for the investors.
For investors, yes.
Now, we also have the government that has come up with the ERGP, the Economic Recovery Growth Plan.
Right.
Would you suggest that plans of this nature would be what would move Nigeria to the point where we want to get to?
Exactly. So a plan such as EGRP is fantastic. Now, the problem is when it comes to implementation. And I think that is where we have so far as a country not done quite well, which is that on paper things look great. When it comes
and we seem to develop really amazing policies.
Exactly, or plans. And then with the EGRP, what we needed to have done is to make sure that the implementation is done. But then there should be an entity that would basically be monitoring the implementation and scoring either the ministers or the MDAs, the ministries, the departments and agencies on the promises made, on the targets made or targets set and how far we've achieved. And if that is going on, whatever you measure gets done. And if that happens, then what will happen is that there would be the concurrent work that the private sector also would begin to put in place.
Yes.
Because there would be that belief and trust between the private and the public sector. And jointly then they can actually face in the same direction and work towards those objectives. And I think we haven't seen that. The other thing is that I also believe very strongly that there has to be a sense of urgency.
Yes.
When you want to do
Certainly.
something, do it quickly, so that even if there are mistakes, the mistakes would be found fairly quickly so that you can begin to correct those errors. And as a nation, we're just quite slow, complacent, and in the process, we become less and less competitive as a nation.
Because I see that at the end of the day, it's the private sector that has the capacity to expand our employment net, create jobs for these unemployed people. So do you think that we have the ability to lift the country out of this bedeviling number of unemployed young people that we have here in Nigeria, which is now creating a high level of insecurity in the country?
Correct. In fact, if you do not engage the youth have this energy that unless it is channeled for positive purposes, it can easily be sidetracked and be used negatively. And the amount of insecurity or the number and distribution of insecurity that is going on in the country has a lot to do with the economic realities of the country.
Yes.
And if we begin to engage them very early, whether it is in the agri or agro-allied industries, whether it is in the construction space, manufacturing, light manufacturing, then we will not be in a position to channel those energies into positive endeavor so that they would begin to build the country. Because it's the young that would do it. It's the young
that's where the ideas are flowing, the knowledge of ICT, creativity. I mean, we're doing a whole lot when it comes to our creative industry, for example.
Right. So the creative industry, the technology space, all of those have places where kids can actually, the youth can, get involved in and push. However, we also need some of those in the fundamental areas of the economy, which is the construction. I mean, we have a huge housing gap. Can you imagine? Unleashing the amount of capital that is trapped in the real estate space, for example, in the lands, and then unleashing that and making it into a productive industry, and that would create a massive employment, which actually, a country like the US after the Second World War, there was a boom that actually lasted 25, 30 years as a result of the concerted effort by government to plan and be there in terms of construction of dams, construction of roads, construction of railways, etc., which actually became the key ingredient of creating jobs. And the private sector was involved in doing that. It wasn't government doing it. Government was the enabling environment. Government was the source of some of those capital, but at the same time, lesser regulations that stifle those business environments. And I think that's what we need in Nigeria to increase or goose that economy so that the growth trajectory would be higher and more inclusive. In that regard.
All right, thank you very much. We'll hold on for a bit. We will take a quick break now. We've been speaking with Kyari Bukar. Just stay with us. Thank you for staying with us. We've been speaking with Kyari Bukar. He's the co-founder of Trans-Sahara Investment Corporation. Thank you very much for your time still.
Sure.
Before we went on the break, we were still talking about the fact that we have a high unemployment rate here in Nigeria. Research has also shown that we have more FPIs coming into the country than FDIs. What's your take on that? Because at the end of the day, when you talk about economic growth, we need more FDIs than FPIs.
Yeah. In fact, for any country, it is the attraction of, you do not have enough resources, right? So enough resources in terms of the capital requirements. Now, you need to go out there and attract capital, long-term capital that would basically be able to come in. They invest that capital in productive industries,
yes,
and then it would be sustainable over a longer period of time. Now that's the foreign direct investment.
yes,
FPI, on the other hand, is foreign portfolio investment.
yes,
That is that these are people that come in, invest in your stock market or your fixed income, and their time frame is usually much shorter. And the reason that they come in is because they look at it opportunistically. I mean, if you're sitting in UK or in the US, your interest rate on a T-bills would be under 2%.
it's very low.
It's very extremely low.
Yes.
Now you look across the pond and you look at Nigeria, and T-bills rates are going 10, 11, 12%. And if you can now stomach the foreign exchange risk, then you could bring in your money, come into the fixed income or into the stock market.
Yes.
But most of the FPI these days are going into the fixed income space. And that means that they are buying 180 T-bills or 180 days T-bills, 6 months, 3, 6, or 9 months, or even 12 months treasury bills. And then that means that these people are coming in and living within the span of a year. Now, here is what's happening. If, for example, the interest rate doesn't, change over that period, with the assurance coming from the central bank and the government of Nigeria and so on and so forth, then they know that that trade is extremely lucrative for them. Does it build the country? Probably not. Does it help government in meeting its deficits and financing and so on and so forth? Kind of, but it is coming at what cost? And so when you look at our budget and you look at the the debt service component of our budget, which I don't remember, but it's somewhere in the neighborhood of closer to 300 billion every year. Now that is the cost of that debt, and it is continues to compound and increases.
Yes.
Now, that's the danger of FPI versus an FDI. I mean, do you need it? Yes, you need it, but it shouldn't be in the proportion that we have right now. I believe it's probably somewhere in the neighborhood of 80 to 20% in favor of FPI.
FPI, yes.
Yeah.
Yes.
If it is somewhere 60-40 or even 50-50, then it means that some of the money is coming in here and staying, and it's helping develop and grow the economy.
And that's what's going to help the issue of unemployment.
Exactly, and that's the issue that we need to address
really tackle.
Internally. And it would be more sustainable when you are attracting FDI year over year. And the key is that people should not look at us or see Nigeria as an extremely risky market to get into, or a risky economy to get into. And you get that with one, which is that our political system is democratic, even though we do have complaints about whether the election is fair, free, but so far there seem to be improvements over time. People might argue with that, but the fact that we haven't pushed beyond the fact that since 1999 the democratic system has come to stay, more or less. The second is that then they look at the economic policies of the governments that have come into power, and there has to be clarity over those economic policies. If it is a market-friendly, market-oriented economy, then that needs to be shared and communicated to the rest of the world so that it can attract the necessary capital. And of course, those are some of the things that some of us believe the government needs to do in terms of attracting foreign capital. We do not have enough money to do anything. If you look at our budget, we're borrowing massively. Massively. Last year it was $2.2 trillion. Naira. 2.2 trillion naira in the budget. But if you look at it in terms of the actual performance, it might even be worse than that. And the same thing this year. The light at the end of the tunnel would be if we begin to attract more FDI than FPIs, and we do so consistently, then we can begin to say, yes, we are now having the right trajectory of growth. But so far, I haven't seen that evidence.
All right, and then on the issue of the African Continental Free Trade Area Agreement that was signed by the president, some people are still not sure if it would add the expected growth into the Nigerian economy. What's your take on it?
Number one, it is absolutely necessary that we sign the Continental Free Trade Agreement. Some of us, especially when I was the chairman of NESG, we believed that that would be good for Nigeria and the greater Africa good. The greater good for the entire continent. The reason is that if you look at the numbers, trade between African countries is abysmally low compared to trade that African countries have with the rest of the world. Now, if we begin to trade amongst ourselves, at the end of the day, it will lift all of us. Now, care must be taken so that there is no dumping. I mean, I could come across the border and set up, bring something from China and then say it is from
somewhere, some other
some neighboring
African
countries. So of course, those are some of the things that people might be concerned with. However, if we all believe that we can actually add value to some of the crude products that we produce, whether they are agricultural products or they are things that we dig from the ground, such as solid minerals and so on and so forth. If we are adding value, then it means that we are actually growing our own economies. And then if we are trading amongst ourselves, then we add more value, actually. The trade itself has a, friction that would be less and less amongst ourselves. Now, the fundamental thing about it is that Nigeria must be competitive. And that requires that we build our infrastructure. The inadequacies of our infrastructure need to be addressed. So government must be able to invest in ensuring that our infrastructure is competitive. Because if there is no energy, then why should I bring a factory and build it in Nigeria rather than, say, take it to Ghana, where I could then bring the finished goods into Nigeria? There are some key industries that you can't just put anywhere and bring the goods, such as liquids and, or food stuff and things like that. It's better closer to the market. And so that would also open Nigeria up for additional investments from all over the world, because the free trade is now bringing either the cluster of economies within certain spaces in Africa. For example, West Africa then becomes one block that one can look at those 350 million people, of which Nigeria is 200 or nearly 200, and that becomes an attractive, large market. The entire continent then down the road become an attractive market. So essentially, it's something that long term, it's going to be attractive for all of us in Africa. Short term, we will have our challenges, but those challenges would only be addressed if we become competitive. How do you become competitive? Your educational system has to be fantastic. It has to be second to none. So we have to invest in education. We have to invest in health, because it requires healthy people for them to be productive. Then you have to invest in those key critical infrastructure that is absolutely necessary. You do those three things with a look towards the future. I think we can be a star.
Make it a better place
in the continent, really. Yeah.
But then quite disturbing, however, there was a report by the National Bureau of Statistics which showed that our non-oil imports into the country rose by over 463%.
Right.
Right? which is quite in contrast with what the government is trying to do. Because we say, oh, we're trying to diversify the economy, taking it off crude oil, and now branching into other sectors that would potentially generate revenue for the country.
Correct. So I mean, a large penchant for importation is a bad sign for any country. It means that we're not productive, we're a consuming nation. I mean, if we are a wealthy country, I would say, okay, that's fine. But we're not. The reality is that our per capita income is extremely low. We are towards the low to low medium or medium low in the Committee of Nations. We just happen to have large population base. Now, the problem of the curse of the crude oil is also being applied to other areas. Whatever we produce, even the agricultural goods we produce, if we are exporting them raw, by raw I mean we just clean them up, dry them, and then ship them out, that means that we're not adding value. We need to add value so that we should be in the habit of exporting finished goods.
Yes.
Now, if our imports are growing at 400%, then we have something, we have a major conversation that we need to have with ourselves, so that we should, reverse that trend. First of all, arrest it and look at areas that we can actually begin to add value ourselves and be a net exporter rather than an importer of those goods and services. So it's a major it's a wake-up call, actually. Right.
And I hope that at the end of the day, we would see the government and everyone involved doing what they need to do to ensure that Nigeria's economy starts to grow, and most importantly, attract foreign investment and investors into the country.
That's the opportunity, because when you say, look, we are importing, I don't know, $10 billion worth of X, say sardines or whatever, for example, then why are we not raising fish? Why are we not, catching our own fish near our waters? Why don't we have fish processing plants that would employ people, and that would then be, and then earn the FX?
Exactly.
So
sadly, this is all we can take for now, but thank you so much for joining me in the studio. Thank you so much.
You're welcome.
Thank you.
Irene. Thank you.
And that's all on this episode of One on One. For more educative and entertaining conversations of this nature, do follow us on Twitter, Instagram, Facebook, YouTube, and LinkedIn, all on Plus TV Africa. I remain your host, Irene Ubani.